Good morning, crypto people. Logical Orange here for Sublime Traders. Today we are going to take a look at the market, starting with the weekly chart and technicals. Technicals because on the macro side, the fundamental side, we have a brutal combination of macro cues which are set to continue this week and possibly beyond. And these form a backdrop for some historical chart retests that really no one wanted to see again. And we need to take a look because, well, we have been in a drop for the last 6 weeks, and we are starting the 7th week with a red candle. It has low volume because it just started, but it can go higher, of course, with the week as the week continues. And we need to establish some levels. We can see that we are now in an interest zone, so we have a block right here. And it has been retested previously. We have dipped in it like 3 times before. The difference is that right now we closed in it. Closing in an interest zone places it in a danger zone also. So this would mean that we might go to the lower side of this interest zone that has basically started right here. This was the initiator candle that initiated the first move. So 1, 2, 3, 4, 5, 6, 7 candles. We usually have between 6 and 10 candles every move we have, if we count them up and down in the weekly chart. So this block right here was formed. We have this lower target. It is not very precise. It is on the weekly chart, but it is just for explaining more or less where we can stop. So we have the possibility to go all the way down to this level. I don't think that this week will provide as a liquidity pool. We touched it barely with this candle this week, so today. We might retest it. I don't think that this will hold eventually, and I think that we will go to the lower side of this block right here. And if we dip below it just a bit, it would mean that we can go even lower, and lower we have this liquidity pool right here, which is at 28,600 to 29k. So this would be a very important interest zone right here. And for now we can only project this far, because of course lower we don't have anything to support us this week right here, but we cannot say if it will act or not. For what I can see right now, this whole area right here is a fair value gap, meaning that we will not stop in it. So if the price goes, let's say, all the way back here, the retest come back and goes down, well, this would mean that right here we don't have any breaks, no breaks at all. Right here we can go all the way to this level. It is too soon to say that it will happen. It is I just wanted to say that this is what would happen in this area right here. Let's hope it doesn't, because I know that a lot of us have seen our spot portfolios melt under this pressure that we have right here. But let's focus on what we have around us. And around us we have, first of all, this order block right here that is also a point of interest, and the levels below it. Continuing on the same chart, we can see that we lost some other important levels along the way. One, we lost contact with the Kumu cloud, so the Ichimoku cloud that is here. The second thing is that we lost the VPVR level that was used to be a support, and now will act as a resistance. And we also lost the 100 MA on the weekly chart, which is a bit scary, because we also closed below it and we opened below it. And right now we are considered into a full-on bear market. So bears really have control right now. What can save us are the levels we just talked before. So moving on with the daily chart, we have the same levels of interaction. We can see that this point is also a potential interaction point based on the Ichimoku cloud. Also, we have refined our potential entry for a long, because on the weekly, as we can see it, on the daily, as we can see it, we still have a slightly ascending pattern, and this would be right here an area that would be an interesting zone for a buy. However, with the macro condition that we have right now, it's really risky to enter longs without having confirmation first. So these levels right here are extremely important supports. Let's take, for example, we would start some longs right here. We would go in this area. We will stop loss below this. So 11%, not that bad on the daily chart. And we would have an entry zone, something like this. Why an entry zone and not the precise zone? Because, well, we have multiple interaction points along the way, and we are not sure on which of these the price would stop. In any case, we didn't have, until now, we didn't have a sell apex candle. So a sell apex candle looks something like this. It has a very long wick, a very small body, or at least the wick would be 25 to 50% of the body, and we didn't have any candle like this until now. We are just plotting new candles, full bodies, or candles where the volumes are coherent with the result, because as you know, or you don't maybe, so I will explain you, the correlation between the volumes and the candles is studied in the VSA. So VSA is volume spread analysis, and this would mean the correlation between the volume, which is an effort, and the candle, which is a result. And right now the candle is a good result of the effort, meaning that we have a good amount of effort and we have a good amount of result. Whenever these two are not aligned, meaning that there is a disagreement between the volume and the candle itself, so between the effort and the result, normally the price reverts. And this is because we have a disagreement between these two. So for example, if I would have a lot of volume and a very small candle with a spread that is very small, spread meaning the distance between the open and the close of the candle, so only the body, we would have a disagreement and the price would revert. On the other side, if we would have a very long candle with very little volume, we would have another type of disagreement, and also the price could revert. This is just to dip a bit into VSA, but right now we don't have any sign of reversal yet. So this is just for an example. I won't take it. It is a potential trade that can be confirmed further on, later on, not today, because today the market is still going on the lower side, at least to 32.8. So this level right here, this would be the target for maybe today even. Depends on the opening of the stock exchanges, especially the New York Stock Exchange, which influences a lot the crypto market. So let's we talked about lower levels, because we are heading lower, so we need to know where we can potentially reverse. Now let's talk about upper levels. Where can we take our potential profits if we were to take longs when we get the setup for longs? Okay, so the first obvious level would be somewhere around here. Of course, this depends also on the Kumo cloud that forms or not, because we can entirely remove it if we want to. Depends on how you make your analysis. Some people don't use Ichimoku at all, and it's not a bad thing. It's just personal preference. For me, this level is this one right here would be a medium resistance. Medium because, well, it reacted in the past, of course, but it is close to the VPVR also, and it is just the beginning of the block that we have right here, which is a bearish block. This one. This would be the block. So it is just the beginning, and of course the price can go a bit higher. This would be the first level that I would be looking for when taking a long. Now, the issue is, well, the market moves in waves. And the problem sometimes is to establish this part right here, which is the reversal part. How can you know that this is the reversal and it's not just a move up before continuing further down? Well, in order to know this, we need to have confirmation. In order to have confirmation, we need to wait. So for example, let's retake the daily. Let's say that we want to enter in this area right here. We have the initiator. We have had the action, the price action until here. So we had a higher high, an even higher high, then correction. So we can also split these zones into multiple subzones. So let's say this would be the distribution. This would be the initiator right here. The move up. This would be continuation accumulation. This would be the move down, continuation for distribution, further move down. This whole area right here is extremely difficult to analyze on the daily because, well, it was also influenced a lot by the macroeconomic situation. And it can also be split in multiple accumulation distribution zones, but we just want to show you the big picture right here. This would be considered also as a distribution before continuation in this pattern right here, in this chart right here on the daily chart. Continuation before this distribution before continuation, and we would have the end of this move around this area where we would start reaccumulating before moving upwards. So if we were to take this logic, this area right here won't be such a bad entry. Of course, just keep in mind you have at least 11%, let's say 11%, 12% stop loss if you were to enter in this area right here. We just need to wait for now. No need to rush. This is on the daily chart. Of course, on lower time frames, we can take shorts. Still, we have the time and some potential entries for shorts. Just keep in mind, whatever you do, what coin you pick, doesn't matter. Keep in mind where Bitcoin is, what levels it is closing on. So for example, we are now closing on this week right here that can potentially be liquidity pool. However, the candle doesn't say it, but it can turn into one. So be careful when shorting around here and watch this level. This level is extremely important. So 31K. The bottom side of this is 29.8, around 29.8, and this area that we already talked about. So this is the map of the map of Bitcoin right now. Also, I wanted to show you the small gap that was formed on CME today. This happens over the weekends because there is a difference between between the Friday close and the Monday open. We still have this to close entirely. So if we can see, we didn't really almost close it, but we didn't, or did we? Yeah, we did. So this won't really matter in the future. This would. So we know that we will close this eventually. So again, we have this as a potential interest point based on the CME gap and the CME market. So 32,960. Let's extend this. Almost touched it again. Of course, the same point of interest right here. And this gap right here. We can leave it like this. This is also a gap that we will fill sooner rather than later. So as you can see, we have just a single candle below it. We can't say what will happen right now because we don't have the data for it. I mean, for the gap. But we know that we are closing on a support that was also a gap closer, and it is an interesting level to watch. So this is on the daily. Now, as I said, on lower time frames, we can still find entries for shorts, even longs. However, we are short biased, so as long as we haven't turned, you only need to look for shorts right now. Looking for longs is extremely difficult and risky. So just keep this in mind, and of course manage your risk. So this was the brief for today, guys. Thank you for watching. This is Logical Orange for Sublime Traders. See you in the next video.